Hey guys, Kill Stokes here. Welcome back to the vid. Got a lot to show you, so we're gonna hop right into the charts after I give you a little bit of a recap of what happened this week. If you are brand new to trading, welcome. You probably hopped into one of the busier trading weeks that I've seen. We had a Bank of Canada interest rate decision, we had an ECB interest rate decision, and we had our non-farm payroll and our jobs numbers come out on Friday. I promise you this week isn't as busy, at least in the first half. However, we do still have a handful of high impact news events, with the main two probably being the FOMC press conference, right? Not necessarily the interest rate decision. We're not going to do anything here in the US, but the press conference and what they're going to say moving forward, especially after our explosive, right, jobs number this past Friday. And then the Bank of Japan monetary policy press conference, or Bank of Japan press conference on Thursday/Friday as well. Japan is very sneaky. They are always very sneaky. There's been the intervention and all this flirting with hiking rates and blah, blah, blah in the background. So it'll be interesting to see what they come out and say. And they always save it towards the end of the week when no one's paying attention. So be aware of that either Thursday night or Friday morning, depending on where you're at and depending on what they want to do. So let's hop in. Got a lot to show you here. Make sure you like and subscribe and tune in each and every week. We're going to start here on the euro dollar. And again, you can see the aftermath of Friday's jobs numbers with the massive move from basically 109 to 108. Now, this is going to sound weird, but these are some of my favorite moves in the market, right? You know, when I was growing up in trading, because I've been here for a very long time now, we used to call this there's a saying, don't catch the falling knife. And the falling knife is, you can imagine, high momentum moves going to the downside or upside, in this case, the downside because it's falling, and then looking for counter trend moves. And again, I started off as a counter trend trader. It was shamed upon. Everyone made fun of me. 18 years later, been consistently profitable. So nothing wrong with counter trend trading, but I was always told don't try to catch the falling knife. Where in reality, falling knives or high momentum moves to the downside, these are some of my favorite moves, and they're my favorite moves for two reasons. One, right, because they fall with such high momentum and they don't give you kind of all the wigglage and jigglage, right, all in here. I'm shaking my body as I wiggle and jiggle. I'm trying to get the summer body back together yet, so don't mind the extra jigglage. Now I'm insecure. But we don't have a lot of these ebbs and flows, which make target making or target projecting pretty easy, because it gives us some pretty clear signals in the market. The second thing is this. Catching the falling knife could be dangerous if you don't know where to catch it. So I think the original term comes from undereducated traders, where you're trying to catch the falling knife where it's in the middle of no man's land. Like maybe you're like halfway through this red move right here and you're sticking your hands out trying to catch it. Bad idea. But if you can identify key levels on where you think price is likely to terminate, become exhausted, and the and is a big one, right? And wait for price action clues, and wait for price action clues, and wait for price action clues. No, there wasn't an editing problem. Your computer or your phone isn't glitching. I want to say it 3 times because it's important, right? Mike Jones, right? Whoever remembers Mike Jones, dating myself again. But if we can identify key levels, we can identify the point where the sellers that are already in the trade are exhausted and they're looking to get out and collect profit. We're identifying a level where there aren't any new sellers interested because it already sold off and it's not cheap anymore, right? Price is too expensive. And you're identifying a level where new buyers are interested because now it is cheap enough for buyers, right? It's the whole kind of economics thing where if you go to a grocery store and you see a product that you like, when it's on sale, everyone's buying it. And then once it doesn't go on sale or the price rises up, people are backing away, and then you're just waiting for it. And once it goes on sale again, you're ready to kind of buy it. So we look at this right here of euro dollar and we ask ourselves, Akil, I do my thing in third person because I'm always actually talking to myself, because as traders, we don't really have a lot of social interaction. More reason for you to join Tier 1 Trading, right? Great community of traders. Get your social interaction and don't be a weirdo. Akil, where are we going? Where are we currently trading at? We are currently trading at a previous level of structure support, right? We can see this level right down here, right? RSI has gone oversold. Again, that doesn't necessarily mean a reversal. Oversold just means a lot of strength in the market, but it is a clue that the further we go oversold, because it's harder to get to lower points, that's just how all these oscillators work, the more likely we are to have a little bit of relief. The market takes a little bit of a breather, and that opens up the door for a counter trend trading opportunity, in this case, a long opportunity. So price is at a really good level, in my opinion. We're at a psychological number, 108. We're at previous structure looking left. Now, what did I say earlier? Do we just want to buy right now? No, right? We want price to be at, we want that knife to fall to a good location, but now we also want to look for price action clues. So as the week starts off, whether you're on a 4-hour here, whether you're on an hourly, wait for those clues, wait for your tweezer bottoms, your pin bars, your dojis, your double bottom, double tops, your higher high, higher close, your 3-bar reversals, right? We can go on forever naming different type of price patterns, but wait for these proven price patterns to show themselves, and then you can look for opportunities to buy from this previous level of structure support. So certainly keeping an eye on euro dollar as our week begins. Next one. Next up is the pound dollar. Similar situation. Again, dollar strength at the end of the week because of non-farm payrolls, RSI oversold. Not quite at the same level of structure. You can see we're coming into one, but we do have underlapping levels of structure, so it's not as powerful as the euro dollar. But we do have another powerful clue here as well, right? And this is going to be in the form of an advanced pattern formation, right? If you look at what price action has done, we have made a move from a swing low to a swing high. We have retraced, we have failed to extend, right? Technically up here, and now we're working our way back down, right? This type of ebbage and flowage, this movement within consolidation can look disgusting, but it also forms really profitable pattern formations. We call them advanced pattern formations. You may hear them as harmonic pattern formations, your M's and W's, wing-shaped things, bats and right, whatever, bats, butterflies, Gartley, ciphers, 5-O's, a bunch of these patterns can form. This one is going to be, right, or let me ask you this. Here's how we determine what it's going to be. We take our Fibonacci retracement from our starting point, our X leg, to our ending point of that first leg. That is going to be our A leg, and we look to see which Fibonacci level was hit. If it hits the 3D2, it's one thing. If it hits the 50%, it's another thing. If it hits the 618, it's another thing. If it hits the 786, it's another thing, right? In this case, you can see that we almost hit the 618. Always check your data, right? My 618 is right here at 127. Funny if you're a fib person. 127.41. You can see the low of this level right here is 127.42. It literally missed by 1 pip. Now, I don't have a close enough rule. We spoke about this in the live room earlier in the week. It's okay to have a close enough rule as long as you actually have a rule. So your rule just can't say, hey, it's close enough. Like, no, right? What does close enough mean? Is it 1 pip? Is it 2 pip? Is it a certain percentage, right? As long as it's defined, you can have a close enough rules. And a lot of your classic kind of advanced pattern formation teachers will do that. They'll look at it in zones. I look at it as a mark. Either it hit the exact digit or it didn't, right? So this one missed the 618 by a single pip. Again, check your own data because data is different, which is going to put me on alert for a bat pattern. A bat pattern is going to look like this: an X to A to B, B to C up here, and a C to D that forms right at, or completes, I should say, right at this 886. My entry zone is from the 886 down to my X leg. I do want stops underneath this level, so if you can get them underneath these lows, that would be preferred, because whenever we have overlapping levels of structure, the lower levels are more important. Now again, we can't just keep pushing them back and back and back, because then we'll mess up our risk reward. So sometimes you're just not going to have the ideal position, but you want to be as safe as possible with stop losses. And just like euro dollar, looking for a buy. So as I mentioned earlier, a lot of the movement to end the week was driven off of the non-farms report. So we're going to see a lot of similar moves on a lot of pairs. We're not going to dig into the details of all of them because this is going to be a longer than normal video. But just make sure you roll around the markets or scroll around the markets and see which ones have similar opportunities. So for example, New Zealand dollar right here, same situation, high momentum move down into previous structure, RSI oversold. We can go to Aussie Canada. Same thing, high momentum move down into a previous level of structure. We can go to, what was it? Pound New Zealand was on my radar as well. This one kind of flip it, reverse it. right? This one, strong momentum move up. Again, look left, structure leaves clues right into a previous level of structure, setting up for a potential beautiful 3-bar reversal right here. If you can get a lower low, lower close, this is one of my favorite ways to enter a trade. Look for a high momentum move to go up. Shoop. A little bit of tail at the top showing a little bit of selling pressure. Then look for another move to try to push a little bit higher, a little even bigger tail to the top, more selling pressure, and then confirmation, right? Because again, we're always looking for confirmation and price action clues, looking for a lower low, lower close candle. So for price action to break and close below the previous low, that is going to be called a 3-bar reversal. We have the RSI overbought as well, which you can add as your confluence. We have structure looking left, right? So CTS traders, combined technical score traders, go down your checklist and mark them off. But another great selling opportunity here, good selling opportunity. Again, we have the overlapping level of structure, which isn't great, but you know, the market isn't going to give you perfect entries all the time. But this is another good one here on Pound New Zealand. Now, heading over to gold, this one's a little bit different. Gold, remember we spoke about this, 2 Trading Edge videos ago about shorts in gold. Nothing has changed, bigger picture with this. However, we are printing in more and more signs for that potential short, right? We're now putting in a head and shoulders pattern. If we take my deal here, a little fancy thing, and we draw it up, we have a left shoulder, boom, we have a head, boom, we have a right shoulder that just formed right here. If you're using a slanted trend line, you can see that we've already broken that neckline, giving you a valid head and shoulders pattern. I personally don't use trend lines. I use horizontal support and resistance. So for me, it would have to break below this level. This is a good example of how you can have 2 traders looking at the same chart and have 2 different opinions. One could be saying, head and shoulders, it's valid, sell it, sell it, sell it. The other one could be saying, not yet, I need more clues. And they can be arguing and fighting with each other and blah, 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 blah. And both can be right just because their rules are strictly different. So I learned a long time in my trading career, like, don't argue with traders. One, it's a waste of time because like, it's just a waste of time. It does nothing for your trading. Arguing with a trader, all it does is take energy away from you and your analysis, right? But 2, you guys could be arguing and you guys can be both right just because you look at things differently, and that's okay. We don't all need to see trading the same way. That is the uniqueness of the market. But just want to follow up on this since we talked about it a few weeks ago. Still keep it on your radar for potential shorts. And then silver is an interesting one as well. Silver, we have a 26.18 opportunity, which that is over, but there's another continuation opportunity to catch kind of the rest of the 26.18, if that makes sense. So the 26.18 for you guys that aren't familiar is this. It's the 2 stands for double top. The 618 stands for a 618 retracement. We are extremely clever, right? But we have price action that gave us a beautiful double top up here, right? Price action came up, we reversed, we retested and failed to break. Beautiful RSI overbought, beautiful bearish divergence. That's a nice entry signal in its own right. Again, you got to be careful with this because we're in the middle of no man's land when it comes to silver. So maybe you're saying, you know what, I like it, but I want to look for a more conservative entry because I really want more clues that we're likely to reverse, which is fair, especially if you are a counter trend trader and price is doing this in the middle of no man's land. So what's going to confirm that double top is if we violate the V point, right? And we're going to see that right on this red candle right here. So once we violate that V point, it gives us more confirmation that, okay, the double top is likely to hold and we're likely to go lower. Now, there's 2 ways you can trade this. One way, you can trade it right here. I forgot the name my mentor used to call this. I think it was, I'm not going to try and remember, but he had a name where he would just trade the breakout right here. Or you can wait for the pullback, like in a traditional kind of pullback trade. Now, the 26.18 in particular, what you want to do is you want to take your Fibonacci retracement from the right top, drag it all the way down to that low point, whatever that may be, and then you're looking for either one, an aggressive entry right at the 618, so limit order 618, bang, get in the trade, or be more conservative, look at the zone between the 618 and the high and say, if price action reaches that zone, then look for blah, 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 blah to get involved in the trade. You can see that played out pretty nicely. Now, the trade isn't done, depending on how you're taking targets, of course. Your expectation is a continuation here, right? So your expectation is that price is going to continue to at least the 127 Fibonacci, which is right here, and maybe even the 1618 Fibonacci right there. Let's put some little emojis on here for target 1. Target 2, I got anything else? Candy, right? Because it's sweet. There we go. Boom, right? So either a Fibonacci extension like that, we can draw an AB equals CD pattern as well. Let me change the color to make it a little bit stand outish. Or you can do a natural kind of a keel, think like the other trader where you just do normal analysis and try to see where you think the opposite party would be involved. You can see pretty decent confluence here. Not only do we have a 127 Fibonacci extension, right? Keep track with me. Hold your fingers up. Do it. I can see it, right? We have an AB equals CD pattern, 2. And we have a 618 Fibonacci retracement from the swing low to swing high, 3. Right? So I think it's a great level right here. So that's where you would be looking for at least first targets with this 2618 trade. Now, why are we bringing this up, Akil, right? Because we're supposed to be talking about trading opportunities that are on our radar. Well, there's another opportunity here. The fact that we just broke and closed below structure, right? I call it a fresh break, allows us to reset the process. So if you are a lower time frame trader, let's say you're going down to a 4-hour, let's say an hourly, one of these time frames. Let's just do a 4-hour for now, and I'll kind of erase some of the stuff here so we get a cleaner chart, right? You're still expecting a move down to this blue line. Again, let me get a cleaner chart here, this blue line. So what we could do is with a fresh break, we identify a lower, lower, lower close. We predict to continue lower. We predict that prices can continue lower to the level that we drew out. If we can get a pullback, right? Doesn't matter where that pullback comes to. It could be here, could be here, could be here. You know, who knows? That's what we got to do analysis for during the week. But if we can get a pullback, then that's an opportunity to look for sells and see if we can capture the rest of this move. So you're not technically a 2618 trader, but you're using the analysis of the 2618 to help you predict where that signal would go. And you're looking to kind of get the last bits of that signal. I'm trying to think of a bird. I'm like, you know, I used to watch a lot of National Geographic, and it was like the lion hunts and the male lion eats first, and afterwards, you know, the little cubs get the rest of the scraps. And after the scraps are done, like that's when like the little vultures or the birds come and pick whatever's left, right? As traders, we're not always going to be the lion, right? We're not always going to capture the big move and make the kill. In fact, that's what your institutional traders are going to do. A lot of retail traders get in trouble because they try to trade like institutional traders, right? And it's not going to happen because we have no idea what the heck they're doing. We can have ideas of how they operate. We can have ideas of where we think they're going to do stuff at. But the honest truth is we don't know until they actually show us on the chart. So as a trader, our goal isn't necessarily to be the first in the move. Our goal is to identify when the lion makes its kill, right? We're flying around, right? We want to identify when the lion makes its kill. Once the lion makes its kill, we want to lock in. As soon as that lion leaves, we want to go in and see if we can get any scraps that's left with that meal. If this is your first time joining, I apologize. It's not always this weird, but it's always this weird. I like to have fun with it, right? So hope you guys enjoy. Leave any comments below, like, subscribe if you're new. That way you catch the video each and every week. Make sure you check out the Trading Coach podcast. A lot of cool feedback over this past week's episodes. The last one's a video edition. Really, really good one is what I'm hearing so far. So thank you, and I will see you guys next week. Until then, plan your trade your plan, tier1trading.com, 14-day trial, come sign up, greatest community on earth, blah, 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 all the stuff I'm supposed to say from the business side, but I don't really care about. Enjoy your day, and I'll see you guys next week.
Be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.